Hello, this is George, and welcome to Trading Simula 18, my 2023 beta edition. I wanted to discuss it today because I'm getting ready to release it here in the next 6 weeks, 6 to 8 weeks. Here's my new, logo. But what I wanted to discuss today real quick, and you can get this beta version when you purchase my book from Amazon.com. George Pruitt. Just Google. Go to Amazon and look up George Pruitt and find the Trend Following Systems book. Trading Simula 18 is written in Python. Python is a very powerful language, as we know, and there's a lot of libraries that are attached to it. You have NumPy, which is their array manipulations library. You have matplotlib, which you can use to basically plot anything, chart anything, visualize it. And there's a bunch of backtesting software such as Backtrader, Zipline, and other things such as that. The problem with those types of libraries is that they're very difficult to use. It's almost like every time you want to test an idea, you have to start from scratch. You can download. They always give you at the beginning of the tutorial using Python, using one of these libraries. They show you how to use Yahoo APIs to access data. The most important thing to remember when you're testing a system, you have to have good data, and so it's worth your while to, if you don't subscribe to something like TradeStation or Multi-Charts or AmiBroker, it's always wise to use a very robust database, even if you have to pay for it. I do a lot of testing in futures. That's my background, hedge funds and alternative hedge funds, and we didn't trade many different stocks, but we did trade a lot of different futures, copper, pork bellies, whatever. And Trading Simula 18, it can trade stocks. I designed it specifically for my own research, and I thought it would be interesting to share it with other people because it's kind of what I consider my ultimate backtesting software. I developed several platforms in the past, and there were limits to what it could do, and I tried to expand those in Trading Simula 18 to be able to test systems at the portfolio level, not just at the single market level. So we're going to test the system using the 2023 version, 2023 edition of Trading Simula 18, and I'm going to show you how to program a simple system that I got out of Mike Cavell's Trend Following book. Here is the system right here. Let me get to it. Welcome to the Trading Simula 18 beta edition. Trend Following Systems, How Great Traders Make Millions in Up or Down Markets. You can buy this book off Amazon. And in the book, I think this is the original, this is a new expanded edition. The original edition looked like this book, I think, or pretty close to it. But there was a system in it that he used trading recipes at the time, and it's now called Mechanica, which is also a backtesting software. It's quite expensive, but it's something that you may be interested in. But he describes a simple Donchian system. You enter a long position on a stop at the highest high of the past 89 days. You get out of that long position if the market drops to the lowest low of the past 13 days. Entering a short is just the opposite. You enter a short at the lowest low of the past 89 days. And you get out of the short position at the highest high of the past 13 days. Pretty simple stuff. His position sizing, which is important, and that's what he emphasizes, is you risk 2% of portfolio capital and you reinvest the profits, meaning you're compounding. I'm going to start with a smaller portfolio. My initial capital is going to be set at $100,000. My portfolio capital, which I'm going to use for my position sizing equation, is going to be equal to the initial capital plus the cumulative closed out profits. No open trade equity. You could have a huge open trade equity, but I'm not going to base my next trading decision based on that open trade equity because I haven't captured that equity yet. So I only want to use closed trade equity for reinvestment purposes. I'm going to, the way Mike Cavell describes his long position sizing is it's 2% times the portfolio capital divided by your long entry and your long exit times big point value. So 2 times your portfolio equity is dollars, right? And the highest high of 89 minus the lowest low of 13 is a price range. So you got to multiply that by the big point value. And we're talking about futures here. Now, if you were talking about stocks, that would just be, the shares times the number of shares times the price of the stock. Short position sizing is going to be 2% times portfolio capital. And this we're going to do just the opposite. We're going to use the highest high of the past 13 days and the lowest low of the last 89 days times the big point value. Now here, the highest high of 13 is always going to be greater than the lowest low of 89. And here, the highest high of 89 is always going to be greater than the lowest low of the last 13. Now, why we do that is, it makes sense to do it, period. But you may ask, well, in futures, and you'll see it, when you use a continuous contract, you know those prices will go negative. It doesn't matter. Using this formula, your highest high of 13 will always be greater than your lowest low of 89, even if your price data is negative. And we'll see that with the soybeans. Michael Cavell had an overriding volatility risk. Basically, if these ranges were too great, if the numbers were too big and created too big of a position size, he would reduce that down to using 2 times the 15-day average true range. So your volatility position size was 2% times the portfolio capital divided by 2 times the 15-day average true range. And if you don't know what that is, you just Google it. Basically, it's telling you how much your expectation of the market to move in the next few days is going to be. And of course, you've got to turn a price range into dollars, and you do that by multiplying by big point value. So it's a relatively simple system. Trading Simula can handle this no problems. And you say, well, the TradeStation can handle this too. And as you know, I've written many books on easy language, and I love TradeStation. I love easy language. There's some things in it I'm not 100% sold on. Portfolio Maestro, which I've written a book on that as well. It's just a little bit cumbersome. And I like having everything right at my fingertips in one script. Whereas with Portfolio Maestro, you have to build the portfolio, you have to build the strategies. It's just several steps. And like I said, you can do this exact same thing I'm doing right now in Portfolio Maestro. And you can use easy language. But I wanted to, like I said, since I'm using Trading Simula 18 for a lot of extensive research today, and I'm also selling it inside my book. And eventually I'll have what I call an enhanced version, which I'll sell for a little bit more. I wanted to demonstrate how to do this system. But before we do that, I want to show you what I mean by us using these predefined libraries for backtesting with Python. This is just one I've got off Medium. If you've never used Medium, it's really cool. They have a lot of software, a lot of code. You have to subscribe to it to get the full, text of the articles or the code. But if you're just playing around with some stuff, sometimes they'll give you some really neat stuff for free. And this was a simple moving average crossover strategy results. This is not the system that I'm describing, but I just wanted to go into showing you, if you Google Python moving average or Donchian system code, this is kind of what you get almost every time. So I'm just gonna jump down here to the code itself, the full code walkthrough. At the top, you import all this stuff. You have to have an Intrinio API key, which I gather is a key to allow you to access some of the built-in libraries that comes with this package. But here we go. If you want to get some data, you got to pull it in. using a Panda data frame. Now, I'm a professional programmer. I've been programming for almost 40 years, I guess. And I love Python. Python is an extremely easy to learn language, and it's kind of like basic, I guess, in some senses, but it extends basic. And I mean, it's basic like in that it's easy to learn, but it extends basic well beyond basic. I mean, you have object basic now, I think, and of course you have objects in Python, but Python is just so powerful. It's just got the built-in list capabilities, and it just does so many cool things. And I think that's why they're using Python to hook into these libraries, because Python is so easy to use. But from looking at this, without doing a lot of research, I don't know what this means. I mean, this stuff's complicated. And if you're not a professional programmer, but you want to program your trading ideas, and you have to know some programming, either you need to know easy language or a little bit about Python to be able to test your own ideas. But this blows my mind how, somebody could expect a non-programmer to use a really cool language such as Python, and basically you're just touching the surface of Python, because you're defining these functions, and you're pulling all this stuff out using NumPy, pandas, and Panda data frames are very powerful. Don't get me wrong. If that is what you're into, by all means use it. It's very powerful stuff. There's tons of people in the background working on this stuff, and they're updating it. It's really neat stuff. But if you're just in there going to try to design a trading system, it's a little bit of overkill. Okay, so you have to get your stock price data. I'm going to use futures in my test. And then you've got to define a moving average of your data. And this one looks like a long-term 20 and a short-term 50. And then you've got to go over here and you got to do the crossover data set, which I think creates the crossovers. And it creates a data list. And then you can create a signal. And here's a NumPy library called where. And I don't know, this gets pretty, see, look at that. That's pretty nasty looking code there. So you go down through here, and you go down through here, and you go and you got to program your returns data. How the system did. You got to figure out how to do it. You got to multiply everything out to just report the returns. And then you got the SMA handler, which is a wrapper function, blah, 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 blah. And as you know, it's not a lot of code. It's only, 100 lines of code, but man, it is very intricate. And as you know, with programming, if you misspell something, you're screwed. So I just wanted to show you that. Now I'm going to jump over to Trading Simula 18, and I love my PyScripter environment, IDE. I use it, and I use Eric as well. So if you ever get into Python, always go with a powerful IDE, which is an integrated development environment. And I think PyScripter is one of the best. Eric is good as well. And there's tons of others out there that just work as well. This is shareware code, or yeah, shareware. I give them a donation, and I download the upgrades free. Okay, we're going to do this real quick. Here is Michael Cavell's system tested. And we're going to test it on a portfolio of different commodities, which I've preset. I'm using Pinnacle data from Ed Pavia. It's great data. It is continuous contracts, so all the contracts are linked together. So you do go negative in prices because you're using a Panama adjustment. So you're eliminating the gap between the contracts. And what we're going to do is we're going to start at the beginning of your template. And that's how you always do in Trading Simula 18. You use a template. You have to use a template, and I got several templates out there. You just save them. You open the template, save it as whatever your name. And I saved this one as TF Cavell 2023. The system name is going to be TF Cavell 3RF, and that's just my way of keeping track of it. You could call it whatever you want. I'm going to start my test date at 2000. Beginning of 2000. I'm running through the end of the database that I have on this computer. I'm going to need $200 days of ramp up. That's overkill. I don't need 200, but I like just to leave that at 200. You can do, in this case, you could do 100 because we're only looking back at 89 days. I'm going to use a commission slippage round turn of $50. I use one word for commission slippage. I could break that down, but just go ahead and bundle your commission and slippage together. So I'm going to use $50 in, $50 out that's per contract, not per trade, but per contract. My long entry length is going to be the same as my short entry length, which is 89. Now, see, that's pretty cool what you can do right there. That's a Python thing. And some other languages you can do as well, but I'm assigning both my long entry and my short entry to 89. Long exit, short exit length to 13. There's my Donchian entry, my Donchian exit. Am I using any indicators right now? No, I'll be using Donchian. But and if you learn a little bit about trading Simula 18, you'll learn that some indicators are what I call class-based. Don't let that word scare you. It's an object. But I make the access to those objects very simple. Donchian is a function-based indicator, meaning that I call it on every bar, and I can derive the outcome or the output without referring to a prior day's information. So it's a function-based indicator, very simple. So I'm not using any of these, and I've got several other indicators, of course, built into Trading Simula 18 that you can utilize. I've just created an Ehlers package, a module. So I'm going to get the market list. I'm not dealing with stock data. So if you were dealing with stock data, you would say equals true here, but I'm not. I'm going to come down here. I have sector analysis turned on. I'm not going to go into the detail how I do sector analysis. I'll just show you how it works. I'll show you the output. So basically you get down to here. This is the important part. Start programming your great trading ideas here. Don't touch stuff above. So I tell you what to worry about and what not to worry about. Don't change code below. So, this is a template. It's all there for you. You know where to start. You don't have to come up with define get data, define SMA data, define SMA crossover data, use a data frame, use NumPy. You don't have to worry about that stuff. This is pure Python here. This is the way I love Python. So what I'm going to do is I'm going to create a buy level. It's going to be the highest high of my high, and I could set high or H, and my high can be is a list of all the highs of the historical data. And I'm going to go back 89 days from the current bar, and I want to offset that by 1. And you have to offset it by 1 because, if you say buy at the highest high of the past 89 days, well, every day your 89 high, if you get a new high, it would be updated, so you would never reach that point. So you have to say, starting from yesterday, give me the last 89 highest highs. And that's what I'm doing there with an offset of 1. And all these function calls are defined in my manual. And I want to add 1 tick to it, okay? It's got to go above the 89. It's got to go above the 89 high by 1 tick, okay? Because a lot of times it'll meet that 89 high and it'll fall back. I want this to breach that line or that level. Short level is just the opposite, lowest low of 89. My long exit is the low of the last 13 days. My short exit is the highest high of the last 13 days. Okay, and what I do here is when Python reads in a comma delimited data file, you'll get some weird prices. Like 50 will be represented internally as 49.999999999.7 or 7. So it's as close to 50 as you can possibly get. But I like to have things rounded right to the exact price. So what I do is I say, okay, I want the buy level to be rounded to the nearest tick, and I go up by 1. So if it's supposed to be 50 and it comes out to be 49.9999997 internally, I take that up to 50. So that's all this is doing here. I could have embedded this into this, but as you can see, this little line here in Python, you really shouldn't go past this column, and that's just a Pythonic. And that's a word for being like Python. Pythonic. You don't want your lines to be too long. That's the whole reason behind Python is some simplicity and the ability to see things clearly and do things easily and clearly. So I make sure that I don't try to make the lines of code too complicated by embedding function inside of a function inside of a function. So I break these down into two functions. So here's my here is my my buy and short, long and short exits. My portfolio equity is equal to the total portfolio equity minus the total portfolio OTE. Now these are words that are these are reserved words, and I give these in an index in the book, and also I've got a wiki now on the internet. Basically, I'm saying I want the portfolio at the end of each day to be equal to the total portfolio equity, and that includes open trade equity. I don't want open trade equity. I want to back that out of there. So I'm going to subtract total portfolio OTE. So portfolio equity will be equal to the initial equity, initial capital, which is 100,000, and it's going to be equal to the closed trade equity and reinvested. So you close out $1,000 and you start with 100. We have $101,000 to calculate your next trade position size. Okay, now let's use Mike Cavell's algorithm for position sizing. Basically, I'm going to calculate the volatility position sizing. I'm going to take the average true range of the past 15 days. I'm going to use the ABS because we can be dealing with negative prices, so that will give us the magnitude of that of the past 15-day true ranges, the average of them. Position size 1 will be equal to 2% times total portfolio equity. You know what? I got a little bug here. Let's fix that real quick. Sorry about that. I tested this early with using open trade equity, and it was making size too much. So, and as you can tell, highlights the words. I love PyScripter. If you ever get an editor that does this, has this capability, so I'm going to paste there, and I'm going to paste there as well. Okay. Now, what I'm going to do is, okay, let's go back to position size 1. It's 2% times the portfolio equity, and it's the divided by the range between the buy level and the long exit, and we have to make that dollars. Position size 2, same thing, except we're using short exit. Got to be careful here. Short exit and short level, and my big point value. Position sizing based on the ATR is 2% times the portfolio equity divided by 2 times the average true range. Again, we have to multiply by the big point value to turn this into dollars. This is dollars, so this must be dollars. Okay. Position size 1 is going to be the minimum of my long buy level, long exit range, or the volatility position size. I'm going to take the minimum of those two. So if this number is like 25 and this is 14, I'm going to take 14. We're going to err on the side of caution here. Same thing goes for position size 2, which is the short entry position size. And then I want to make sure I am, and of course I could have embedded this function call into this as well, but it would have made that line a little long. I always want to trade at least a position size of 1. So I'm going to say take max position size, and this could turn out to be 0. I'm going to make it a 1. So I'm always trading at least 1 contract. Here I'm printing some stuff out, and you'll see how I did that. And that's the beauty of trading Simula 18. Where you're testing or developing, print stuff out. Debug if you want to. You have this unbelievable debugger built into PyScripter. It's absolutely amazing. Okay, so let's go ahead and look at the order directives here real quick. If I'm not long, MP, let's open that back up. I love this. You can also, as you can tell, I'm collapsing text because the MP matches, the if is matched to this. So if you want to close that out, you could do that. And you'll see that a lot. I hide a lot of stuff here that you can't see because it's just you know, I like to program without distraction. So I collapse a lot of text. If I'm not long, MP is market position, and this is not long, is not equal. That's the exclamation equal. That's the way Python, you know, In easy language, it's like greater sign, less than, greater than sign, back to back to determine non-equality. But this here, non-equality is used, is determined by the exclamation equal. If I'm not long, I'm going to set my price to buy level. My trade name is TF Cavell B. My position size is going to be equal to position size 1. And here I'm going to add a trade ticket. I've got a trade ticket, and we're going to append this trade to the trade ticket. And what are we going to do? Well, the directive is to buy, and I'm going to give it a trade name. And I have to give it the position size. I've got to give it the price. And I've got to tell it it's a stop order. It's not a limit order, and it's not a market order. You have 3 types of orders in Trading Simula 18. You have a stop, limit, and market. Okay, if I'm long, there's your equal. That is, this is called an assignment operator, which is just equal. But in many cases, many languages such as easy language, the assignment is the same as the equals operator. But in Python, the equals operator is equal. Okay, that says, okay, if market position equals 1, and I've been in the trade more than 1 day, then I want to get out at the long exit. So my price is going to be long exit. My trade name is going to be long exit. I'm going to go ahead and use my trade ticket. You have to do this. And this is a template. So all these templates have all this code pre-filled for you. You just go in there and make your modifications. I'm going to exit long. That's keyword. I'm going to use the trade name, which is long exit. I'm going to use the current shares. That's a keyword. It's built in. Keeps track of all the shares. I'm going to go with the price, which is long exit. And I'm going to use a stop order. The short entry is just basically the opposite. Okay, and we've got the long and short entries and exits defined. The buy level, short level, long exit, short exit. We also have the trade directives where we've appended the trade ticket. So all that's been done. Now I'm going to run this for you on a medium-sized portfolio, and I'm going to show you, before I show you the completion of the run, I'm going to show you how Trading Simula 18 is a little different than most backtesting platforms. So I'm going to go ahead and run this. I just want to make sure of one thing. Yep, I've got a pause in there. We'll stop. So let's go ahead and run it. Now, always remember, Python is a interpreted scripting language, meaning that you usually run it within an environment such as, in this case, this is PyScripter, or idle, which comes with Python, or Eric, which I have as well. And there's numerous other IDEs out there. So we're going to run this within the PyScripter environment. This is your Python interpreter at the bottom. So if you print anything, it'll show up down here. It's like the print log in TradeStation. So let's go ahead and run it, and hopefully we don't have any errors. And to run it, of course, I forgot to tell you, you've got to go up under run. In any environment, you're going to have a run command. So we're just going to hit run. And in my hard drive, my local disk, I've got my continuous contract data database. And they're just a bunch of files with the symbols, the symbol or the commodity symbol as the first 2 characters of each file name. So you could select one individual file to run, or you can do a portfolio, and I call that the pour files.pour. And we're going to do what I call the ranking port. And this is what the ranking port looks like. And you can create these with just an editor, with whatever editor you want. The simple, the Notepad if you want, Notepad++. So I'm going to open this with Notepad. And inside ranking.pour is just a list of the markets I want to test. And Pinnacle has, since we have a combination of pit data and electronic only data, they've created a new symbology for many of the markets. Like, for example, AN is Australian dollar. ZG is gold, ZS would be soybeans, and ZC would be corn. And so you kind of have to learn these different names if you were to use Pinnacle data. And I would highly recommend using Pinnacle or CSI. Pinnacle data is really inexpensive. You don't get a lot of bells and whistles with it. You just get the data, which is fine. If you're going to be using the data and creating your own platforms, that's perfect. If you want something a little bit more sophisticated and you want the capability of plotting the data and seeing it, CSI may be the route to go for you. Okay, so I'm gonna go ahead and close that down. That's what ranking portfolio looks like. Ranking port. Let's close that down. And let's select it. Let's run it. So the first thing I do, Trading Simula 18, the first thing it does, it loads all the data. So it loads every bit of the data. So if you have 40 markets, the first thing it does, it loads 40 markets, and it does the entire history. It could be 40 years. So you have 40 markets and 40 years of data. But remember, RAM is very large nowadays, so it's no big deal loading all that into memory, and it makes it quicker when you're doing manipulations. Now, on the first day of our database, which we started our testing on 2001, sorry about that, 2000, January 1st of 2000, that was a holiday, so it was the second undoubtedly. So on the very first day of our database, which is the third, here are the symbols that have a day of data, have that date in their database, I should say. Sorry about that. And I got position size 1, which is the buy position, buy size position, and short size position, short position size, long position size. I'll get it straight in a second. And I also tell you where I'm going to buy at, short at, and what the ATR is in dollars. It's $408, and our total equity is $100,000. In the very first day, it's initial capital, basically. Now, the reason I did that was I wanted to show you that Trading Simula horizontally spans the portfolio. It doesn't go through all Australian dollar, then flip over to dollar index, and then flip over to FN is euro currency, JN is Japanese yen. It looks at the entire portfolio on a daily basis. So on 103-2000, I look at the entire portfolio. So by the end of the day, if I have a trade that's been closed out, that equity will go into the total equity. So let's see, the next day should probably be the 4th. So let's hit OK. And it is the 4th. And wish I could scroll here. What I'm going to do is I'm going to hit OK one more time just to get to the 5th, and then I'm going to hit cancel, and you'll get to let you know you came out of it. So here's the 5th, and we've had no closed trades. We undoubtedly had one. Well, this again here is how sometimes Python represents integer numbers. It converts it to a floating number, and that's basically 100,000. And so I just want to show you the horizontally spanning of the portfolio. So on day 5, I figure out any positions for the Australian dollar, any positions for the dollar index. Did I have a closed trade on the Australian dollar? If so, add that to the portfolio so I can recalculate or recalibrate my position sizing for the next day. So that's how that works. And that's all horizontal spanning. Instead of, like I said, going down each market, I go across the entire portfolio. So that tells me at the end of the day, I know every position for every market in the portfolio. I know the open trade equity for every market in the portfolio. And I know if any closed trades occurred for any market in the portfolio. So by doing that, I can dynamically change the position sizing, and I can do all kinds of different things. Knowing the positions, the risk of each market at the end of each day, you could act like you're a portfolio manager and make modifications to the portfolio. And you can do that with Trading Simula as well. Okay, I've commented out the code that did the printing of all this jazz, all this stuff here. And you can just do this. You can go to source code, and almost every editor has this ability to toggle or untoggle the comment that's untoggled, so it would print out. I'm going to toggle it, And in Python, the hashtag is the symbol for the line comment. So if you put the hashtag or # at the beginning of the line or somewhere in front of the code, it'll comment that out. Basically, it'll tell the interpreter to ignore that code. So that's what we've done here. So let's go ahead and run it again. This time we're going to let it run all the way through. If you think about it, we're doing 20, almost 24 years of history across a very large portfolio of markets. So the one weakness with Python is it's not super fast, but when you're working on developing a good trading strategy, you don't really necessarily need speed, especially if you're using end-of-day data. In this case, we are. If you're doing like intraday data testing, like 5-minute bars or something like that, then you would probably want speed. It's more important to you. And then you say, well, what about optimization? Well, Trading Simula can optimize, but it's not super fast. I think one day I'll add a genetic optimizer to it, but I haven't done that as of yet. I do have the capability to do a complete search space optimization, which is called brute force. So you go through all the iterations and permutations of your optimization search space, and as you would think, it would be kind of slow. But in my mind, you really shouldn't need to optimize too many different permutations, especially across a portfolio of different markets. The more you optimize, the higher the probability that you're over curve fitting. And what about walk forward optimization? Well, on trend following systems, I don't think the walk forward optimization works that well. So I'm not going to add that capability to Trading Simula 18. Okay, it looks like we're done. It ran through every market. We just want to let it do its sector analysis now. So it takes a couple minutes to get the sector analysis taken care of. The sector analysis is a very powerful tool if you want to see which markets perform best in the portfolio. And just to give you an instance, let's scroll up. I do this all to the output. There's a lot of data in the output window because when you see this, maybe it doesn't perform as well as you want, so you want to make a modification. You don't want to delve into the reports. So I do quite a bit of information to the interpreter window, so you can look at it. And for example, here is the last 4 years of the currencies. Started right here, and it's worked its way up. It's back down to below zero. Australian dollar, wow, killed it, and so did the Canadian dollar. What about the energies? Energy strong across the board. I mean, huge winners. Drawdown's pretty substantial though. ZU is, I think that's crude oil, heating oil, and natural gas. So this system did well in those markets. Metals did really good in the metals too. The gold, silver not so good. Did extremely well in copper. And here's the last 4 years. Had a peak in right after the pandemic, came back down. The grains, last 4 years, it's very. Grains. Here it is. Grains did really well in the beans, and then you could tell that's because the volatility probably dried up, and you started trading some huge position size. The financials, because of the pandemic, right here, took off, and it stayed up. And since we've had the interest rates going up so much, you've had a down move in the bond, so it caught that. This is the softs. Pretty good in the sugar. Again, I guarantee you're taking on some position size. Cotton did really well. Not so good in the coffee or the orange juice. This sector looks good. This sector does not look good. It's come back, but overall it's a big loser. But in the last, since the pandemic, it's had a nice run, but it's sub-zero. Big drawdown as well. Let's see what else. That was the meat is above it. That's what that is. This was the softs. I was looking at the graph. Sorry about that. The data is above the graph. So here's the financials. Let's look at that real quick. Looking good. The grains, very good. Don't trade corn though. Why? I don't know. You'd think it'd be the same as soybeans. That's trend following for you. And again, well, should I curve fit? No. I think maybe modify your position sizing. Should you trade corn? Maybe, maybe not. Metals, should I trade silver? Probably not, only on a trend following system. Can I curve fit the system to make silver make money? Sure I could. Should I? No. The energies, spectacular in the energies. Unleaded was really strong. Crude, very strong. And the currencies have been tough. Euro currency, big drawdown. Yen, big drawdown. So that's just a quick output that you can look at when you run a system to say, okay, I need to go back to the drawing board before I even delve into the report. So let's look at the reports real quick. I'm going to look at the trades first. As you can tell, I create a bunch of reports for this TF Cavell system. I'm going to first look at the composite, which we looked at earlier. All these are text files, so they'll open up within Notepad. Makes it easy. I give you the total profit for each market, the drawdown, the average trade, the average win, average loss, average max win, max loss, percent win in trades, and the average per year. Then I break it down on an annual and monthly basis. If you go to the very bottom, as you can tell, since the pandemic, the system has really done exceptionally well. All trend following systems have basically done exceptionally well. Up to that point, it was like it was just terrible. I mean, I lived through this here. 2014 was a tremendous year. 2008 got us back on track, made everybody have faith in trend following again. You had a bunch of CTAs just start trading trend following only. No options. That was a nasty word. Mean reversion was talked about. Some did. Short-term swing trading, some did. But the majority, probably 9% of the CTAs out there were doing trend following, and we were as well. We had some other systems, but overwhelmingly we were trend followers. 9 hurt. You got a little bit of a reprieve in 10. Your clients, if they were able to hold on, they said, okay, we still have faith in trend following. And then you enter the wilderness of trend following after 2010. 2011, not bad enough to quit. 2012, still not bad enough to quit. You're not making any money though. If you're an incentive fee-based corporation, you're not making money. 13 jumps in there, and then you start losing some of your client base. You know, you've gone 3 years without making money. And this is very typical of the trend following. This system is very typical of the trend following community. And then 2014 came, and those that did hold on said, okay, trend following has been resurrected. I made $500,000 here. I'm sticking with it. So that was the oasis in the wilderness. As you know, the oasis is a small land mass with water. Once you go outside of it, you enter the wilderness again. We did so in 2015. 2016 didn't kill us, and you might have held on to your client base a little bit. 2017, gone. You would have lost your clients. 2018, maybe we'll have a reprieve, and we did a little bit. It wasn't enough. 2019, bam, again, another, it's not big losers, but it's you're still not making money. You haven't made any money since 2014. And then the pandemic hits. And that's when trend following was reignited. This system made $500,000 in 2020. 2021, it didn't give it back, which is normally what happens in trend following. 2022, another big year. And 2023 thus far, not too bad. So these types of systems have given life back to trend following. As long as we have the volatility and price movement, some type of price movement up or down, you'll be fine. And the report, of course, gives you the average monthly return, the yearly return, standard deviation of the monthly return, standard deviation of the yearly returns. You're sharp on a monthly basis and you're sharp on an annual basis. So let's look at a couple more reports real quick. I like looking at the equity curves of markets. I like to see all the equity curves at one time if that's possible, just to see how each market performed. I can see in a tabular form how that worked. Bear with me 1 second here. Okay, so I want to go, as you can tell, this is Australian dollar. This report is generated by Trading Simula. It's an Excel file. Just open up an Excel. Dollar index, a little bit better. Australian dollar is terrible. Euro currency, big drawdowns. Yen, drawdown. Corn, Canadian, not good. Crude oil, there's your crude oil. There's your heating oil. Big drawdown before that took off. That's natural gas. Gold. Silver. Copper. That's not a bad equity curve. Beans. You don't start trading size until you start making money. And more money you make, the bigger the position sizing. So it really took off. It's not a bad bean system. Corn. That's just horrendous. Bonds. Since you had diminishing interest rates and you had rising interest rates. So great environment for trend following. T-note should be about the same. T-note's not as good, but it has had this rally. Your softs. Sugar. Sugar's very nice. Sugar's sweet. That is a sweet equity curve. That is a very sweet equity curve. Cotton, not bad. I think that's cattle. Feeder cattle. Coffee, Joe, orange juice, not good. Breakdown. Here's the breakdown of the markets. Your big winner was, of course, heating oil. That is heating oil or unleaded. I think that's heating oil. Yeah, I think that's heating oil. ZH, I have to cross-reference that. Big loser on ZT. Big winner in sugar. And then if you want to see the combined equity curve, you can do that as well. Let's look at the combined equity curve. Give it a second to open. Boom. Not bad. This is the typical equity curve for trend following systems. I mean, it's very similar. I don't care which system you're trading, you're going to follow this type of pattern. You had the 2014 rally. You had the 2008 build up. Most of the time you gave that back mostly up until 2014, big rally again. And here's, like I said, here's the desert, the wilderness. And we didn't surpass that wilderness for 6 years. Imagine you're managing a $1 billion CT on a fund, on a trend following system. Your incentive fees have got to get above, your equity for your clients have got to get above that, which took 6 years before you start making any real money. Your management fees probably covered some salaries, data, whatever, but probably not enough. A lot of the trend followers fell, out of business at this time. Death knell. And then we've had this nice rally in 2020. There's a pandemic, and it's come back. Now, what's the future of trend following? Who knows? But that's the reason you have Trading Simula 18 type platforms, to see if you can create a better trend following mechanism or a better money management mechanism. So let's just take a look at one thing real quick that makes things really easy with this type of platform. Everything's open source. And I wanted to see real quick, the soybeans, I saw that equity curve and I said, well, I'm going to look at that a little deeper. So I'm going to make sure it's trading like I want it to. So I'm going to go to trades. And I want to go to beans. And I want to go to the very end here. As you can tell, price, continuous contract data, the way it's suggested, price goes negative. So you better make sure your platform can handle negative data. Trading Simula 18 can, don't worry about that. So let's go to 2023. And I wanted to look at this here, this huge loss. $24,000. That's a lot of money. Up to that point, you had made 311, so it's not that big of a deal, but it's a substantial loss. So I said, okay, I want to make sure that's accurate. So that trade started on the 24th. So what I did is basically loaded the data into Excel, which you can do. It's really easy. And I created a formula. What day was that? 324. Let's see. It was a. Here it is. It was a go short. So basically, I put the data up there. Was that short? Let's double check that. Notepad. It was go short at 1201.75 and then cover at 331. And basically, I loaded the data. And I did the highest high the last 89 days. You can see the formula up there. Lowest low 13. Lowest low, what is that? 89. And highest high 13. Anytime the price exceeded the go short level, I put a go short here. Anytime it went above the exit short, I put an exit short here. So here is the actual data, and it validates what Trading Simula did. It's always good just to check to make sure everything's working the way it's supposed to. So you're right there at the data. The data is not that much of an abstract. It's on your database, it's on your computer, it's in a database. You can load it, you can play with it, you can manipulate it. But it makes things a lot easier when you're debugging and testing ideas to be so close to the data. So we're going to close this out. I'm not going to save it. I don't need it. Okay, so that is the Cavell system. To be honest with you, it's not that bad of a system. Here's sectors again. There's currency. Is it the best trend following system? No. Is it the worst trend following system? No, it's not. I've seen a lot worse. Position sizing is aggressive in this. So that's where you might want to think about limiting the number of positions. Because we did get up to, and let's look at that real quick. We got up to, let's go to sugar. Sugar would be the one where you put a mega amount of contracts on. Let's see if we, got up to 6 right there, 6 contracts. Let's see if we got up to 10 contracts, 18 contracts. So this was when it makes, fixed fractional approach. When you're making great money, watch out, because that next trade, because of your size, because of the, you're a victim of your own success with trend following systems using a fixed fractional approach. You're going to have that big drawdown just because of size. So I hope you enjoyed this video, and I hope you check my book out at Amazon.com. Again, this is the beta version of the 2023 edition of Trading Simula. And you get all kinds of neat stuff. I'm also including this as well. I created just a very simple graphic charting package. Very simple. You can't do a lot with. I didn't want to use Matplotlib, which is a very powerful environment because you have to learn a lot. I just wanted people to be able to load their data. So if you just want to, you want to open some data, chart price data. What's the Australian dollar done lately? AN, and this will apply any common delimited data. It could be 4 fields for open, high, low, close, 5 if you got volume, or 6 if you have open, interest, and volume. So we're going to do AN, And these are the trades that occurred in, because I've got the Cavell trades inserted into this chart. And you can pick a day. Let's go 2016, 2007. Put that in there, redraw it, and it goes to that date, which is really cool. I have this thing right here, kind of like a scroll bar. Makes things a little easier. Say I want to add the Bollinger, say Donchian. Let's do, what was it? It was 89 and 13, right? There's the 89. Let's go back over here a little bit. And if you want to highlight, you highlight the bar and it tells you what the date is on that. Like I can come over here and I can highlight this, clear it. What day was that again? That was 411, the Donchian channel. The highest high is 49, 49.69. Highest high. Okay, that's the 13. Lowest low, and then it drops way down. What's crude oil look? Let's look at the bonds. So let's go chart price data. We still have the Cavell trades in, so we want to go bonds. So that's, what is that? It's US. Let's do US real quick. Let's do US real quick. Pardon me for just a second. Here are the bonds since April, when the interest rate started really going up. So I give this a little trading package or charting package away with the Trading Simula as well, and it's for a one market analysis, it's not that bad. Okay, so that is Trading Simula 18, the 2023 beta edition. Again, if you buy my book, I will release the beta version in about 6 weeks. The release version. I think I'm going to go ahead and put up the beta version in the next week or so, just for you to play around with. And if you have any questions, I am also developing a Tiddly wiki. Let's see if I can find it real quick. It should be Trading Simula. It's on Tiddly host. If you go there, you have the Trading Simula, and you've also got this real cool menu bar. Go to data, it tells you about the data, how it works. I've got a welcome. There we go. That's better. I've got keywords, indicators, sector analysis, money management, things like that. So, okay. I hope you enjoyed the video, and I hope you find trading or testing with Python a little bit easier than using those very sophisticated libraries that seem to be available on the internet. And every time you Google something, you find a different way of doing something. It's not consistent. I think if we're going to start using Python, something's got to be made a standard that's consistent. And Trading Simula 18 is going to be consistent. I'm not going to change it. It's going to follow the same paradigm as it always has. And I hope you have a great day. Thank you.